Good morning, good morning, good morning, ladies and gentlemen. It is that time. It is time for another pre-market pulse wave report. That's right, ladies and gentlemen. Pre-market pulse wave report. It's been a while. I've been locked away in the lab for quite some time. And I have to tell you, um, it's been busy. It's been a lot of research. It's been doing a lot of research. And, sometimes, you have to do that. You gotta, step back, you know, you gotta do what you gotta do. So that's what I've been up to. That's why I have not been able to do a lot of lives, because my main focus is to our clients, to all of our pulse waivers out there. So I've been in the lab working on some things. So now that I am emerging out of my domicile yet again, of course, it's always with good news for our pulse waivers out there. So, first things first, this is Wednesday, July the 13th, 2022. That's right. We're in July and we're almost halfway through July. It's crazy that the month just started and we're already midway through it. Time seems to be accelerating on multiple fronts. Um, it's just weird like that. Um, Now, I'm doing something a little bit different today. I have invited some of our post waivers to come on here if they so desire. It's up to them. Um, I know not everyone has a mic, but everyone here, yeah, I've invited everybody, so you guys can come on and you can, do what you do. Okay, let's see here. This is my first time doing it like this too. All right. Yesterday we did a thing where we had our training sessions, and we talked about a few things, and I talked about different aspects. Today I want to focus to another level, take that conversation, and I want to highlight a few things from that conversation. All right, so everyone who is coming in, go ahead and smash that like button. You know how we do. If you want to, share some things, you can feel free to do that. No problem. First things first. Let's just talk about what the markets are doing. So I'm going to share my screen here. We're going to go over what's going on in the overnight markets first, because you need to be aware of that. All right. So first things first, we have our thing here, our real-time quotes. Hopefully you guys can see it. I know it's kind of small, but it's the best I can get it. Okay, so the US dollar right now still trading above the 108 handle, up 27 pips. The euro currency is down 19 pips at 176. It did dip to a low of 146 last night. So just 46 pips before dropping in below par. Your pound sterling is down 40 pips at 118.75. Your Aussie is off 15 pips at 67.56. Canadian off about 8 pips at 76.80. Bitcoin futures has been on a roller coaster ride this morning. It's down 175 right now at 19,140. Ethereum futures are down just 5.5 points at 1032 even. Crude oil futures up 74 cents at $96.51. It fell this morning to $93.57 before rallying off of that low. So we got a $3 rally off of the overnight low already in crude oil. So, this is the first time in a very long time that you got crude oil trading below $100 a barrel. Now, is this going to be a short-term thing? I'm going to say right now, yeah. It's still technically, from a momentum standpoint, technically, bullish. That really hasn't changed. You're just having a lot of volatility. Something I haven't seen in a long time, if ever, was back-to-back blowouts in crude oil within the same trading week. So a few days back, we had a $10 drop in crude oil. I haven't seen a $10 drop like that since 2011, 2012. I think it was 2012. And then a few days later, then it dropped $7 in a day. That is very rare for crude oil to do something like this, but yet it did it. Nat gas this morning is up 40 cents at $6.57. Gold getting crushed yet again, down $11.30 at $1,713.60 per ounce. After threatening to get into the 1,600 handle, we got to an overnight low of $1,704.70, threatening to break that 16 handle that we've been talking about in the long term of things. Silver also weaker. It's down 2 cents now at $18.93 an ounce. It did hit an overnight low of $18.78 an ounce. Copper is not doing so good either, $3.27. You got the Dow down now 295 points at 30,671. It did dip down to 30,534, getting dangerously close to triggering a crash, an intraday crash alert. Ladies and gentlemen, keep your eye on that Dow. The NASDAQ futures down 210 points at 11,569. It hit 11,478 low this morning before bouncing back up again. Also getting dangerously close to triggering an intraday price inflection point, crash alert. This is when the trading bots pile on and take the market to lows that would make your nose bleed. E-mini S&P 500 down 49.75 points at 37.74 half. It did get down to 37.52 even earlier. That's a 20-plus point rally off of the overnight low. And finally, the Russell My Hustle up. It's down 18.3 points at 17.1040. It actually broke into the 16 handle, got to $1,699 even in the overnight low session. Now, what happened was you had the markets trying to, get a little bit of green going on this morning, but then the CPI numbers came out at 8:30, and that made everything turn negative. Even Bitcoin was positive prior to the news, and now everything is negative. Your long bond is down a full point plus 11/30 seconds, trading at 138 and 1/32. Then you got your soybeans down 14 cents at $14.54 a bushel. Corn is off about 12 cents at $5.86 a bushel. And your wheat is up 4 cents at $8.18 a bushel. All right, so that's what the markets have been doing in the overnight and early morning sessions. Okay, so my stance, my analysis has not changed as far as the overall markets are concerned. That has not changed. The markets are still in very dangerous territory. And I do mean dangerous. All right. Just looking at the overall cryptos, if you will, pretty much every crypto is in a bear market. Every USD pair that is on our pulse wave report is in a bear market on the daily algo charts. Every single one, from Atom all the way down to ZRX, bear market. That's right, bear market. So, in case you were wondering, the answer is yes, bear market. Grizzly bear, like rawr. And yes, that includes Bitcoin too. Bear market. All right, so just something to think about moving forward. All right, so what about other issues that are happening with these markets? Well, for the most part, this is the summer. In the summertime, you can have dead type markets. You know, they're quiet, not a lot of volatility, basically no volatility. But because of the economic uncertainties, we do have issues now where anything goes. Things like to usually pop off as far as reports and news on the weekends, and it usually starts right after the Friday session closes. So after that 4 p.m. Eastern Standard New York time bell rings, that's when reports start trickling in. And then that's when you're in a situation when you can't do anything about it. Rarely will an issue arise that will affect the crypto markets over the weekend. Mostly it affects, U.S. equities and Forex and commodity futures. So you have to be, abreast of those things as well. Now, as far as news, this news has ripple effects. Anything that has to do with war or rumors of war is going to have a ripple effect in these markets. And there's no way around it, nothing you can do about it. It is what it is. Now, I believe that this will probably be the backdrop behind the washout that you're going to see across the board in pretty much every market. Doesn't matter what the market is. Everyone is going to get roasted to the downside. I gave you a price target yesterday in Bitcoin. For those that missed that, you're going to want to go back and watch yesterday's video. It was a short video. I was only on for maybe 10, 20 minutes, but I gave some price points. I went into more specifics with the training session. So if you missed yesterday's training and you are a Pulsewave member, it's on your dashboard. You can watch that. And right now, those things are in play. If you look at your coming into today, if you look at your dashboard, look at your Pulsewave report, you'll notice that these markets are in a dangerous territory right now. I believe that we have not seen the lows in a lot of these markets. You have not seen the lows. We're nowhere near it. A lot of downside potential is yet on the table. But coming into today, you should know that, yes, the Russell, yes, the Australian dollar, the British pound, yes, the euro. We already talked about Bitcoin, the S&P 500, Ethereum, the NASDAQ 100, the Dow, all of these markets, silver, are in bear markets. All right, on the daily algo charts, you are in a bear market in those markets. Nothing you can do about it. It's just a fact. On the daily algo charts, though, however, your crude oil is managing to keep itself bullish, even though it's fallen below $100. So keep that in mind as well. Any downside you see could be quite limited. So get ready for a reversal at some point in the oil. I think oil is going to stay high as long as we still got wars and rumors of wars going on. Now, switching over to gold, you should know, unlike silver, all right, gold is in a bull market on the algo charts. It's just experiencing a pullback correction that we've been talking about. All right. So it is not weak as silver. Silver is, bear market all the way. There's no questions about it. But gold is not. Gold is kind of holding its own. But I warned you weeks ago that, the lower, the mid to lower 17 handle was coming. And now that we are here, the market is pretty much staying within that mid to lower 1700 handle. All right. So that is another thing to keep to make a note of. All right. So what else we got? As far as commodity futures, corn, wheat, soybeans. All right. So as you know, when the war situation first kicked off, everywhere you turned and looked, there was panic. So you had panic buying, especially in wheat. Wheat just exploded and has remained high. It's remained in the high double digits. And it's been this way since Russia invaded Ukraine. So where does that take the market from here? Well, on the daily algo charts, you got corn, wheat, and soybeans still in a bull market. All right, they're still in a bull market. That has not changed even with the pullback correction. Now, as far as from a momentum reading, when you look at these markets, you have to also admit what you see. And you still got bullish momentum on corn and bullish momentum in soybeans, but you got some bearish momentum in your wheat. And that's just because the market's been pulling back. Doesn't mean that it's done moving higher. All right, that's something to think about. Doesn't mean that the wheat is done moving higher. So we have to think about all of these things when we're moving forward. It's good to know and think about where are we, what's going on, where do we go from here, kind of thing. So you have to look at the trends in the markets that you're looking to operate in. Another key that we have noticed is the different conversations around the markets in the mainstream media. And one of those is, my man Frank is here. What up, Frank? What are the talking heads saying about the market? And what you see is that the talking heads are warning, don't buy the dips, in these markets. You don't want to do that. Says, when have they ever told you anything that was correct? I see your question on the platinum. Platinum's in a bear market too. The platinum futures is in a bear market too on the daily algo charts, and we just hit a new 52-week low in the platinum on the future side. So just FYI there. Palladium too is in a bear market on the daily algo futures charts as well. But today it had a primary crash alert as well. All right. So what I noticed is that the talking heads were saying, don't buy the dip, don't buy the dip. If you notice something, if you've been watching the financial channels for any number of years, you will know that they're always extremely late to the party. I remember when they gave they finally gave a sell rating on Enron when it was basically trading at $1. But when it was at, when it was over $100, $200, where were they when the market was declining? They kept saying, buy it. If you loved it at 200, you'll love it at 100. If you loved it at 100, you'll love it at 50. If you loved it at 50, you'll love it at 20, so on and so forth. They waited until imminent destruction was clear, and then they said, okay, we give a sell recommendation. So when they're saying don't buy something, all right, that's when you should be buying. When they say don't sell something, that's when you should be selling. In the business, we call that talking your book. So if Goldman Sachs is heavily long, let's say Twitter stock, they'll say, you should go in and you should buy these dips, buy these pullbacks. and they give you reasons why to buy because they're long. They're not going to tell you to sell and crush their open long position. No, they're going to tell you should be buying. So that's how you know they're long something. It's when they tell you should be buying it. How do you know when they're short something? It's when they tell you should be selling it. So they're telling you do not buy the dips in the stock market because that's going to interrupt their shorts. They have massive shorts in the stock market. So they're telling you get out of our way, step aside, don't buy the dips. Markets are heading lower. They're telling you the truth on this occasion because they are short heavily these markets. And they want you to get out of the way. Because what happens in an open auction in a security, if there's no buyers, the market price will just fall gradually on its own. All right. It's just how it is. All right. Bear market, no one there to prop it up and keep it from falling. No buyers, no bids, market falls. Bull market, no sellers, no one there that wants to sell. Well, guess what? It's going higher. It's just the dynamics of the markets. Okay. All right. Let's see what else. Yeah, I did mess up, didn't I, Frank? My bad. Sorry about that. I guess I did the wrong thing. ISO saw we. Okay. As far as side note here, as far as the dollar, when I talked about when we first came on, I said that it was still above the 108 handle. An interesting thing is that the ETF portion of the dollar is what we need to take a look at because, and that ticker is UUP. So UUP is in a bull market along with dollar index itself is in a bull market. Coming into this morning, the UUP had a primary crash alert on it, though. All right, primary crash alert. So you got to pay attention to that because it's saying that it looks like the market is a little lofty here and we could even pull back. Now, in the overnight market, the US dollar did pull back to 107.74. It's currently at 108.40 right now. So it's showing you that, there is some issues here with the long positions in this particular market. So you would do well to think about that before, making any serious moves. Not to mention the inverse ETF, the UDN, has a primary rally alert on it. So you do well to pay attention to that as well. All right. So where do we go from here? Well, markets have to choose their own way. You can't force markets to do anything. And you definitely can't force your opinion on them. Markets are going to behave the way they behave. They're going to act and react the way they act and react. Your job as a trader is to trade with the trends and or momentum of each market. Momentum can shift daily. The market can be bullish today and bearish tomorrow. So trading on the daily momentums is a little bit trickier because you have to be more nimble on the on the mouse clicking. If you focus more so on the longer term, then you're in a better space because you can ride out some of the volatility. So keep that in mind as well as you're moving forward. These daily momentum shifts, though, are key indicators on when and if likely a market is bottoming out or topping out. So that is very important to learn how to read those signs and signals. And practice makes perfect. If you are a new trader, even experienced traders, you got to make sure you are staying sharp and staying alert. So you look for those type of things. Now, coming into it this morning, if you just look at the momentum readings, you'll see that the Russell futures came into today with some positive momentum behind it, even though it's in a bear market on the daily algo chart. So when you see stuff like that, you have to take notice to it. Now, if the market's in a bear market, but yet you're getting a positive momentum reading, it's because the market may be trying to bottom out. And so you look at those and then you wait for your intraday price inflection points, and then you do what you have to do. All right. Sometimes you're looking for intraday price inflection points to the downside. Sometimes you're looking for intraday price inflection points to the upside. We could be in a bull market, but you're looking for intraday price inflection points to pull back, and then that triggers that long entry point, and vice versa on sell days. It just depends on what the markets are doing. It sounds confusing until you take a look at the reports we put out every day, and it makes it extremely crystal clear what you should be doing, whether you're buying or selling. You may be buying weakness today and buying strength tomorrow. You may be selling strength today and selling weakness tomorrow. It just depends on what type of day the market has planned out for you ahead of time. And then you make that move. And yes, markets can be forecasted. Yes, markets do move in trends and counter trends, and sometimes consolidations with bearish biases or bullish biases to them. Again, knowing and being able to read the market that you're looking to enter and trade in is key. Another thing you look for when you are trading is you look for your Bermuda Triangle. The Bermuda Triangle is signals that the elite send to themselves using the price action. And only those that are initiated will understand these numbers. It is quite often you see the number 666, and you'll see that either outright or in some type of succession. When you see that, that is a signal that a market is either bottoming or a market is topping out. And usually sharp reversals occur around that. And we label that the devil's box or devil's triangle. And it's not difficult to see these things as they arise. For a case in point, you remember back during the financial crisis of 2008 that actually started in 2006. And those that were in the know, like myself at that time, got out in 2007. When 2008 rolled around, that's when the lid came off and they actually announced and told you what it was, and the wheels came off. You know the story. But in 2009, March of 2009, the elite sent a message, a signal to themselves. And that was when the S&P 500 hit 666. Once that happened, there was an immediate turn in the market. The market stopped falling and started rallying, and it rallied heavy. Okay. Why? Because the market sent a signal. The elite sent a signal to themselves, and only those that are in the know understood that. Another Bermuda Triangle type of a situation is done not intentionally, but unintentionally, but again, only for those initiated. Same thing, 2008 financial crisis. There was a time when right at the closing, right before the closing bell, like minutes, like 5 minutes before the closing bell, they were interviewing pit traders on the floor of the New York Stock Exchange. And there was this sea of floor brokers and traders. And they had, stacks of paper in their hands and in their vest pockets. And they were all crowded in this one area. And the lady went up there, and it was the black chick. I forget her name. And this was on CNBC. And she went up there, and it was like, what are you doing? Now, actually, was it Bloomberg or CNBC? I can't remember which channel it was. But anyway, and she interviewed a couple of them and said, yeah, what's going on here? Why are so many people crowded right here? And it was because a lot of them had sell orders. And these were special sell orders. These were market on close orders. All right. And a lot of it was, fill or kill or whatever. It was desperation. But that wasn't the point. The point was not how many people it was, the sea of brokers and traders on the floor around this one particular area. That was irrelevant. The part that was key, the message, was in the numbers. And they were asking, so how many orders do you have? Oh, I got 5 million. How many you got? I got 3 million. Oh, how many you got? I got 2 million. How much you got? Man, I got to sell 150 million right on the close. How much? What you got? And it went on and so on and so forth. But the numbers that were given, if you understood, you would have immediately peeped what the game was. Now, think about it just for a moment. What do you think the game was? Had you been in this moment, as I was fortunate enough to be sitting there in front of the screen at that moment, I knew immediately what that meant. The market was already down. Right after the closing bell, the bell rings, ding, 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 ding. The market is closed, meaning you can no longer buy and sell. You can't do anything. You can't, no more transactions for you. That's what it is. However, market on close orders have to be filled at the close. So once the market closes, those orders are still processing. They must be filled. And what happened was, the volume was so much, it was so many orders to sell, that it made the Dow Industrial Average drop an additional 700 points after the close. Now, back in these days, 700 points was enough to make front page news on every newspaper across the country. That was considered a crash. That was considered, investigation. We need answers. Why is the Dow down $700? 700 points. It was crazy. Today, 700 points is nothing. We've seen the market move, over 2,000 point drop in 2020. So that's nothing. But back then, it was everything. A 500 point or 700 point move in the Dow was rare. And when it happened, someone had some explaining to do. So after the 700 point drop in the Dow, everyone was like, oh my goodness, oh wow, right? What happened? Well, when the markets reopened, I think you know exactly what happened. All right, so this was the sign that the selling was literally just beginning, and it was. The market didn't bottom out until the first week in April of 2009. And that's when the S&P hit the 666, giving the signal that, okay, it's time to stop selling. It's time to start buying now. And the market's reversed, and that's when people start buying. I say all that to say is that everything that can be known, that is already known, it's already been priced into the market, whether you believe it or not. That's point one. Point two, the markets can be used to send signals and messages between the elite. It's always been the case. That's our second point. Third point, you can predict with accuracy and with consistency what the markets are going to do 24 hours in advance, because that is what I do and have been doing for a very long time. And I enable others to do the same. That's when you subscribe to the Pulsewave reports, and you're doing that with me because it's telling you what the market's going to do a day prior to the market doing it. Our reports go out ahead of market moves, not after them, or not during a move, but before, prior to a move. Now, my man Dirt in the live stream just posted another important message. And it said, Georgia Guidestone's explosion video, timestamp 3:33 a.m. As you know, 33, we know what that means and that whole Masonic stuff, but it means other things too. It means other things too. It's also a derivative of the 666. Therefore, a message was sent. What did the Georgia Guidestones represent? It represents the New World Order and what it was like the 10 commandments of the New World Order, basically. Okay. So for that to come down, to explode, to implode, however you want to call it, is also sending a message. What is the message? I'll let you think about it for a minute. What do you think the message is? Georgia Guidestones explode. What do you think that means? Now, on the surface, you would probably think that it means that, okay, we have blown up, we've stopped, we have successfully thwarted the plans of the evil one, and that's no longer going to happen. Their new world order is done. It's toast. Can't happen. Will not happen. Won't happen. We succeeded. We're done. We killed their plans. Wrong. That is not what it means. That is not the signal that was being sent. The message that was being sent, my man Dirt just mentioned it again in the live stream. It's popping off. It's about to go down. That's what it means. It's about to go down. We don't need the Guidestones up anymore. Time's up. It's time now to be about it. No more talking about it. Now it's time to be about it. It's a message saying it's time. They're bringing down the current order to establish the new order. All right? And it's called New World Order because it's for the world. It's not just for a municipality or jurisdiction. It's for the entire world. Now, before you start doubting that, just let me remind you that in 2020, the entire world came into agreement. They came into agreement on shutting down the global economy simultaneously. Without question, everyone shut down the global economy. All those that are a part of the global economy closed their economy, closed their borders. Doesn't matter what the rationale for doing it was. That's irrelevant on why they did it. The fact and the point is that they did it, and they did it in unison. So if you ever doubted a world government, that was your wake-up moment right there. You can't even get politicians to agree on what to have for lunch, but yet they agreed to close down and shut down that economy. The economy came to a grinding halt. Something to think about. How easily that was done. How successful they were at doing just that. They made it happen. So they showed you that they have all the power. They can do whatever they want, whenever they want, and there's not a thing you can do about it. We can vote. You've been voting for decades, and nothing has come by it. But yet they got y'all thinking about voting. All right, so that's all I wanted to talk to you about this morning. Tonight, Lord willing, we'll go into the end of day report, and we'll look at some charts based on how these markets close, and I'll give you some key things to look for. Don't forget to smash that like button. Remember, bulls make money, bears make money, and pigs get slaughtered. So don't forget to take what you can and give nothing back. And I'm out. Smash that like button. Peace.